What's up guys, welcome to Glory Investing Show. I will need some strong coffee today because we have a lot of reading in front of us and a lot of research for this video. I'm so excited for this one because we are talking about my favorite stock, Shopify. If you never heard about Shopify before, we made a lot of videos about this stock, so check them out on our playlist. Shopify was started by snowboarding enthusiasts a decade ago. In fact, it started as an online snowboard shop, moving it to e-commerce software when the founders couldn't find what they were looking for, a platform to both sell goods and grow the brand. I am up 400% on my position, and I'm planning on keeping this stock forever because I see Shopify taking over a large portion of e-commerce market in the future. As of right now, Shopify is holding only 20% of the market. I have a hard time to believe in these numbers, but even here I see strong potential for market expansion. The Canadian software company helps more than 1 million merchants across 175 countries to sell and market their products. In return, it earns subscription fees. The cost of monthly Shopify subscriptions range from $29 for entrepreneurs to $2,000 and up for large companies. It also offers shipping, digital payments, and fulfillment under the umbrella term of Merchant Solutions. Before we start our video, I will ask you to gently make that like button turn blue and don't forget to subscribe.
Oh no! Okay, thank you.
We are witnessing stock market pullback right now. Democrats are sending their $1.9 trillion blessings to support the economy, but we are waiting for that money to hit our accounts so we can buy more Shopify and Bitcoin. Shopify stock is having pullback like the rest of tech stocks. From February 14th, stock dropped more than 10%. This is the perfect time for me to put more cash into this stock since you all know how bullish I am about this tech giant. In 2020, Shopify emerged as a clear coronavirus stock winner. More consumers and merchants turned to the Shopify platform. More Americans are opening online stores and selling goods and services to make money as the effects of the pandemic have wiped out jobs and disrupted in-person activities like dining and shopping. This shift has brought a wave of new businesses to Shopify, which sells subscription services that enable people to put up websites, accept online payments, and ship and track orders to customers. During last year, that was hard on the economy. The most active sector was retail trade, which recorded a 54% increase in new business formation. That activity helped to boost Shopify's profits 72% for the first 9 months of 2020 compared with the year before. The growth also made the company's stock one of the market's best performers. Its share price has more than tripled since January 2020 to a market capitalization of roughly $177 billion, about the same as oil and gas giant Chevron Corporation. Canadian software company helps more than 1.7 million merchants across 175 countries to sell and market their products. In return, it earns subscription fees. The cost of monthly Shopify subscriptions range from $29 for entrepreneurs to $2,000 and up for large companies. It also offers shipping, digital payments, and fulfillment under the umbrella term of Merchant Solutions. Let's not forget that in 2020, Shopify also forged a marketing partnership with the viral video sharing app TikTok. We made an entire episode about this. Earlier partnerships included Walmart, Facebook, Pinterest, and well-funded startup Stripe. Also last year, Shopify made key moves tied to digital payments. It rolled out Shop Pay Installments, a buy now, pay later product. And it launched Alipay from Alibaba as a payment method, allowing US merchants to get paid by more than 1 billion Alipay users in China. The global e-commerce market is expected to grow at 11% PA over the next 5 years. Online's share of total retail sales has steadily been on the rise, with e-commerce penetration hitting 21.3% in 2020. If it weren't for the bump in online sales from the pandemic, the $861.12 billion in e-commerce sales wouldn't have been reached until 2022. But with this kind of growth, Shopify is also getting a lot of enemies on the market. BigCommerce, Volusion, WooCommerce, Wix, Squarespace, Amazon, and others who want the piece of this $1 trillion empire. BigCommerce is Shopify's biggest competitor due to its huge range of powerful sales features. WooCommerce is self-hosted, which brings technical challenges but gives you more control. Wix is the best for smaller businesses looking for greater creative freedom, but Squarespace has the most stunning designs. And nothing was that surprising till I received the news that big Amazon just acquired Sells, a Shopify competitor from Australia. Amazon quietly acquired the e-commerce platform on January 15th, but it didn't publicize the acquisition. Founded in 2013, Sells is based in Sydney, Australia, and provides small and medium-sized businesses with a platform to launch their own online stores and add online payment options to existing websites. Amazon previously operated a service similar to Shopify called Amazon Web Store that allowed small businesses to run online stores built on Amazon's technology. However, the company shut down Amazon Web Store in 2015. We can talk about Shopify competition all day, but let's get to the real deal. The fourth quarter 2020 numbers. Shopify, aka Shop, said it earned an adjusted $1.58 per share in the fourth quarter, up 267% from the year earlier. The company said that the revenue jumped 94% to $977.7 million. We are just starting, guys. Make sure you smash that like button and tag all Shopify fans in comments because these are some amazing numbers, guys. Gross merchandise volume for merchant customers jumped 99% to $41.1 billion versus estimates of $38.21 billion. Monthly recurring revenue, aka MRR, as of December 31st, 2020, was $82.6 million. Growth accelerated to 53% year over year, with MRR up from $53.9 million as of December 31st, 2019, due to the continued high number of new merchants joining the platform in the quarter following record merchant additions in the third quarter. As of December 31st, 2020, Shopify had $6.39 billion in cash equivalents, and marketable securities, compared with $2.46 billion on December 31st, 2019. Operating income for 2020 was $90.2 million, or 3% of revenue, versus an operating loss of $141.1 million, or 9% of revenue for 2019. These are amazing news, and we can see how well managed this company is. In February 2021, Shopify announced the expansion of our accelerated checkout, ShopPay, to Facebook and Instagram. With this expansion, Shopify Payments will process all transactions by Shopify merchants on Facebook and Instagram upon full implementation of the integration later this year. This is the first time that ShopPay is being offered outside of Shopify, giving buyers on Facebook and Instagram a fast and secure way to check out and carbon emission offsets on every delivery. In 2021, Shopify will help merchants take advantage of the strong secular shift to online commerce by investing in initiatives that put Shopify into the hands of more entrepreneurs. Shopify will invest in 6 river systems so they can continue innovating and enhancing its automated fulfillment technology to support the development of Shopify Fulfillment Network as well as their network of external customers. What I personally want to see is Shopify letting Square to process payments with cryptocurrency. There you go, I call it first. Next year, come back on this video and tell me I was right. A lot of people ask me, is Shopify stock a buy right now? If you want to own a company which is promising better future for entrepreneurs all over the world and a better online ecosystem, faster payments, standing behind amazing customer support, you're looking for Shopify. Shop was a big winner in 2019 and 2020, solidifying its threat to eBay and Amazon. Key acquisitions and expansions promise more runway for growth. From a technical viewpoint, Shop stock is not in a proper buying zone after breaking past the 1,285.28 buy point. After a slow start in the new year, the software stock quickly regained momentum and turned into a market leader again. Let's see what analysts say, from 1 being strong buy and 5 being strong sell. Shop stock is having rating of 2.4. I'd like to give experts a chance to prove me wrong, but my gains from Shop stock are telling me I am right, and I'm planning to add to my position as long as I can catch the stock below $1,350. When Tesla started, a lot of people didn't see their vision nor believe in their products. They just couldn't see how they can benefit humankind in the next 10 years. Don't let Shopify stock slip through your hands.